Have any further delay, let's go ahead and start today's live meeting. And I'd like to first introduce our moderator for today is, of course, Pat Spear. Pat is Editor-in-Chief of Insurance Networking News. And Pat, with that, I'll turn the call over to you.
Thanks, Aaron. And thanks to all of you for joining us today. Well, we may all be tired of hearing about how economic strains are affecting our very way of life, but the fact of the matter is this. Our current marketplace is in a self-leveling mode, meaning those insurers who create a seamless, efficient, automated business environment for those with whom they do business will survive and thrive in this economy. And who are these winning insurers doing business with? Well, the obvious customer is the keystone in the bridge. It's the producer. For this reason, the term customer is king has never been more important than it is right now. Whether captive or independent, the agent or producer plays a critical role in driving revenue, meeting those revenue expectations, and helping the carrier establish critical market share. That doesn't happen in a vacuum. It happens when the carrier implements straight-through processing and other similar technologies that make it easy for the producer to sell their products. This seems especially true not just in tough economic times, but also in areas where it's tough to compete, such as catastrophe-prone areas, where the livelihood of hundreds of insurers who have been struggling in this difficult marketplace is at stake. Our speakers today have a lot to say about how technology processes have a direct and positive impact on the business of selling insurance. We'll be eliciting your responses in this interactive session, by the way, because we're going to be conducting some polling questions. And as Aaron told you, we'll hold some time out at the end for our speakers to be able to answer your questions. So if you have a question along the way, I encourage you to type it in the box. And at the end, we'll try to get to as many questions as we can. Talking about how to respond and grow in a soft market today will be Donald Light from Celent, Victor Arocho from the Responsive Auto Insurance Company, and Billy McCarter from MajescoMastek. Our first speaker is Donald Light, Senior Analyst for Insurance at Celent. Based in Celent's San Francisco office, Donald's research focuses on all the important core systems, and he has a deep expertise in accounting, reinsurance, product life cycle management, business processes, and rule solutions. Donald is the author of several reports on the technologies associated with these areas, as well as on fraud mitigation technology, business rules, and business process management. Most recently, Donald was brought in to help a major specialty lines carrier develop a strategic IT plan, as well as a build versus buy analysis. And as always, he's asked to help select vendors for a number of carriers. The vendor selection is very difficult. I'm sure most of you know Donald. He's pretty popular with the greater press, including The Economist, The Wall Street Journal, New York Times, NBC Evening News, NPR. I could go on and on. I'm happy to say he's also a friend to Insurance Networking News, both as a frequent source and as a columnist for us. Donald is also a frequent speaker at Accord Loma, IASA, and I'm sure many of you saw him participate last week on a panel of experts at ISOTech. Before Celent, Donald was a consultant with Sapient and for his own consulting firm. He has a BA cum laude in economics from Princeton and an MBA from the University of California, Berkeley. He's a CPCU and has served as chair of the National Society's Research Committee. Donald, I'm going to hand this first off to you.
All right. Well, thank you very much, Pat. So one of the issues that everybody has to face, and Pat alluded to this, is that things are getting tougher out there. Insurers have been losing their pricing power, also known as the soft market, for some time now. This season we had a couple of hurricanes, and for those of you who've forgotten, hurricanes do occur in this time of year. We've gone a couple of years without them until this year. And there has been the small matter of the financial crisis, which about the last week of September, insurance companies kind of got off of the sidelines and started moving towards, if not finished stage, at least on the stage. But some things have not really changed and really have stayed the same. And it is that consumers and producers, agent and brokers have a choice of what insurer they want to do business with. And after they look at price and terms of coverage and so forth, it's no surprise that they will generally bring their business to companies that are easier to do business with and avoid those companies that are not. Now, there are, of course, several elements that go into what makes an insurance company easy to do business with, but underlying and enabling a lot of those elements is technology. So that's what I'm going to focus on in my comments this morning, and I think that's what you'll hear from most of our other speakers as well. Just a couple of words about my own company, Celent. We are the insurance industry's premier provider of business and IT strategy research. We also do consulting for both insurers and technology vendors. We have a very deep and seasoned number of senior analysts located both in the United States and on the ground in London, in Zurich, in Beijing, and in Tokyo. The soft market has been with us for a while, and now the financial crisis is here. There's still a lot of uncertainty as to how the financial crisis is going to impact insurance in general and personal lines, property casualty in particular. And a lot of that uncertainty isn't really going to get resolved until we see how deep in the recession hot water we're going to end up, and how long that stay in the hot water is going to last. Well, nobody knows as of this morning. You can be more of an optimist or a pessimist, but several things are clear. And first, that the consumers, the policyholders and prospective policyholders, are going to be more price sensitive than they ever have been before. People are stretching their dollars and very, very acutely aware of when and how they want to spend those dollars. Producers who have their own budget issues, as small businesses generally, are going to favor doing business with carriers that can respond quickly and accurately, that they have some certainty as to what an insurance company will do given the submission of a particular risk. And the insurers themselves are going to be focusing very closely on managing their own expenses without sacrificing quality of risk selection, pricing and risk selection that is an underwriting process, quality of servicing policies, and quality within the claims adjustment process, avoiding what's sometimes called leakage, sending money out the door that really should not go out the door. All of these trends and all of these pressures are pointing towards a much higher level of task automation and straight-through processing that is overall automation insurers are going to be undertaking, and in many cases quite successfully already, with dealing with the flow of business that comes into their shops. I'm going to communicate, hopefully, two big ideas in the rest of my comments. First, that insurers have already today unprecedented power to automate both tasks and processes, and the role of how technology enables that I will describe. And second, that this ability comes kind of just in time because producers, the agents and the brokers bringing the business in, are becoming more and more vocal, and I'm going to share some of the findings from a very recent Celent survey that we've just completed with about 900 producers in demanding real-time access for tools and for information from the insurers that they do business with. So turning to the first big idea, automation of new business tasks and processes. There are actually a number of modes of automating that come under the heading of automating processes within insurance companies, and I'm going to distinguish them among four of them. First, STP, or straight-through processing. This is where data is entered and/or data is accessed from internal or external sources within the company. Decisions are made, calculations are performed, and actions are taken without human beings touching those steps, those activities along the way, other than initiating them at the start, that maybe carrying out some of the actions at the very back end. STP is in personal lines realized it was a fair by certain companies at a fair level of frequency, over 50%, maybe sometimes even over 80+% for some kinds of business coming in, and at lower percentages over on the commercial side of the business. The second form of automation is task automation, and this is where individual parts of a straight-through processing, getting data, accessing data, performing calculations, making decisions according to rules, are automated, but the entire process is not. That is, there's a human being who is kind of sitting in the cockpit or the control tower, if you will, and saying, okay, here's a task, do it on an automated basis, give me the results back, but then I, as a person, will process this information and go on to the next step or delay the next step as appropriate. The next mode is having a workstation or a desktop for both underwriters, for operational staff, for adjusters. And what this means is having basically all the information available in digital form. Paper is no longer present. And having built-in, pre-designed workflows, decisions driven by rules, ability to handle content or access forms, correspondence, reports, and so on, all available in one place to an underwriter, to a service staff person, or to a claims adjuster. And the last mode is case adjustment. You can think of it as kind of a specialized desktop for certain long duration processes. It's a very complicated underwriting of risk, where maybe many insurers work together in a syndicated kind of way, adjusting very complicated claims where there maybe is a death or a major injury, or handling medical cases where there's medical or rehabilitation or complex litigation resulting from a claim that has been filed. Automation itself brings new capabilities, and some of these capabilities include being able to pull information from both internal sources in an insurance company, policy information for claims, and claims information being pulled automatically for the next renewal round back to underwriting, and external sources, be they credit checks, driving records, other kinds of scores. This gives underwriters, and where there are rules engines in use, both direct and intuitive access to that information. That is, the information is not just present, but it's presented in a form that can be easily understood and used by a human, or plugged into a formula that the rules engine will execute upon. There are also a whole explosion that we're seeing of capabilities of creating reports for both first-line workers and their managers, their supervisors, and dashboards that is giving process and performance activity in a graphical, visual form that both give kind of real-time feedback to the workers, this insurance company staff, and give actionable guidance as to where the bottlenecks are occurring, where there may be a need to shift work, how prices are actually being, quotes are actually being offered in terms of relationship to prices that have been indicated. Analytics is also slowly but surely gaining a lot of attention. Best practices, which has been kind of the time-honored tradition basis for how insurance companies make decisions, are in many areas, certainly in terms of design processes, are being supplemented and eventually, in some cases, being replaced by statistical analysis, saying that if for these kinds of risks coming in the door, these are the ones that should go to underwriters, these are the ones that can be processed straight through, for example. And lastly, automation also enables much more direct communication with producers, with prospects, and policyholders across a whole variety of means. That is, let the producers, let the policyholders decide. Do they want to pick up a phone? Do they want to go on web? Do they want to have instant chat? Do they want to do any and all of the above three in any order? And technology tied into a real-time database of what the transactions have been for a particular account enable that to happen in a seamless way. We are seeing a heightened interest compared to certainly a year or two ago in financial justifications for technology initiatives. And this is an example of building a business case for automating the underwriting function. Here there are 4 elements in the business case. Now just kind of, and a similar analysis could be undertaken for automating any other function as well. Here, just I'll kind of run through these 4 elements. First, the underwriting operational expense with the use of automation should decrease because individual underwriters will have higher productivity. Think of the desktop, the cockpit, if you will, and greater consistency in terms of how they exercise that function. Premium should increase, the top line should increase because the insurance company becomes a better business partner to producers and has the ability to both communicate and to calibrate its appetite, that is types of risk within a given line of business that it will take or will not take, so it's saving the producer's time. Losses should decrease because the basic decision of how to rate what kind of a quote should be offered, and just the terms of coverage and the basic decision to offer coverage or not can be driven in many cases by rules predetermined, again either following best judgment or derived from statistical analysis. And also there are better performance metrics. As processes are automated, there's always a trail, statistical and historical transaction trail that becomes fodder that can be fed back into an analytical process. Last element is expenses within technology, the IT group itself. This is more variable. It might increase or decrease. It does cost money to acquire new technology, often amortized over a number of years. That can be balanced by less effort and in some cases less expensive skill sets that can be used to sort of configure and support newer kinds of automation as opposed to sitting around and writing a lot of code to support the older applications that are around. Next slide shows, and again I'm going to stay with underwriting here, underwriting automation, but a similar looking slide could be developed for both policy service and for claims and some other process areas. This is kind of a shape of the space slide, that there are a lot of different kinds of technologies around, and this is how we at Celent see them fitting together. So if you look in the middle here, we see the core systems, policy administration, PAS, and or underwriting systems, kind of an emerging category of software that we're seeing. In the inner ring, for enterprise level kinds of technologies, first connectivity, often SOA these days, but could be older forms of integration, connectivity, connectors, enterprise service buses, and so on. Rules engines, workflow, business process management solutions, and document management, content management solutions to automatically generate and control forms of correspondence. These are enterprise solutions because they can be used across many lines of business and many functions as well. And then in the outer ring, there are other more specialized point solutions dealing with the new business cycle, rating engines, of course, portals becoming pretty much a standard expectation of part of doing business, workstations as mentioned, automated access to external data sources and analytics as discussed. Impacts of these new forms of technology on the actual organizational forms. First, three major impacts. First, the mix of specialized and support staff that is going to change, and associated with that is that underwriters can spend their time underwriting, and adjusters can spend their time adjusting, as opposed to doing data entry and finding out where that file is or where the paper in the file should be. Managers have new tools to monitor and change these, monitor process flows and to monitor the decisions that are being made. The second big idea that I'll just cover rather briefly is how producers are demanding these new tools. Now, as I mentioned, we've just concluded a survey of over 900 producers asking how do you choose the carriers you do business with, what role does technology play in your choices, and what do you need in the future. So clearly, service came across as a very important driver of the producer choice of what carrier they do business with. Some of the must-haves that producers identified is insurance company technology enabling them to provide outstanding service to their clients, having a good working relationship with their underwriter enabled by technology, and handling claims effectively and efficiently. Producers also have indicated that there are a number of very goods to have, getting underwriting decisions back quickly, quick policy issue, and having flexibility in the terms of coverage. Producers have indicated they appreciate the investments the insurers are making in technology, and this has enabled them, as producers running their own small businesses, to provide better service to their customers and having faster policy issue. They've also enabled each agency, each broker to have higher levels of sale and to have better control over their cost structures. In terms of how producers look at STP, they see a carrier that offers straight-through processing about a quarter, a little bit over a quarter of producers say they're much more likely to do business with such carriers, and over a third of them say that they're somewhat more likely to do business with such carriers. Producers' expectations of how much STP, straight-through processing, they can do will vary by their lines of business. We see that about 20%, about a fifth of all producers say nearly all of their business, and almost a third of the other producers say most of their business should be able to be processed on an STP basis. And producers say, they indicate in strong terms that they want access to information and documents and data. They rank as very valuable access to things you see listed here: loss histories, claim status, uploading, the ability to upload and download application submissions, commissions, where the money comes from, and so forth. So that concludes the comments I have to make, and I'll now turn the microphone over back to Pat.
Okay, thanks, Donald. Before I introduce our next speaker, I thought it might be a good idea to hear from our audience members. So we're going to conduct a polling question, and I'm going to read it off to you, and then we're going to read the answers slowly, so take your time here. Which of the following technologies can most help your organization in this soft market? Portals, policy admin and underwriting systems, workflow and business process management, business intelligence, claims, other, or none of the above? I guess there's also a no vote at the bottom, but we're hoping that everyone who's listening in at this point take some time to read through the question and give us your answers. I'll give it just about another minute. Which of the following technologies can help your organization in this soft market? Okay. There's actually still people voting, so I want to make sure we give enough time for everyone to be able to provide their input. Okay. All right, Aaron, why don't we, at this point, close the polls and show the results. So take a look. Okay, it looks like 10% of you said portals is going to help your organization. 42% of you said policy administration systems and underwriting will be a key element in being able to survive the soft market. 25% of you said workflow and BPM. We've got business intelligence at 14%, and 3% of you marked claims. All right. Okay, so let me go on now to introduce to you the next speaker. We're going to be hearing from Victor Arocho, president and co-founder of the Responsive Auto Insurance Company. Victor oversees the company's daily operations as well as the planning and implementation of the company's multi-vendor IT systems, no small task. With more than 15 years of experience as an insurance industry executive, Victor's most recent role was as Chief Operating Officer at Seminole Casualty Insurance Company, where he led the transition to a paperless environment. Although to this day he'll tell you he still loves sports, Victor has proven that there are many successes to be had long after being chosen to play college football. With a BA in Business Administration from Uppsala College, Victor earned selection to the who's who amongst colleges and universities. Victor, I'm going to hand it off to you.
Well, good morning, everybody. Donald, thank you for excellent presentation. I'll tell you a little bit about our company. We're headquartered in Fort Lauderdale, Florida. My partner is John Mackel, who's also about 17 years of non-standard auto insurance experience. We're a regional carrier down here. We provide minimum limits, state-required auto insurance for our clients in the state of Florida. Our distribution channel is driven through the independent insurance agent. This is our situation, what we were focusing on when we started off to launch our project. We wanted to make sure we focused on selling. We wanted to be in the auto insurance business. I didn't want to be in the IT or the programming business. And it was we wanted to make sure that processing was as efficient as possible in an effort for us to drive and grow our business. We needed to have some differentiation between some of our competitors. We were trying to build brand loyalty, and we wanted to be at least par, if not a little better, than a lot of the competitors that are out there. And being a startup company, we were fortunate to start in these times where we're afforded many of the technologies that are available today. We wanted to have faster delivery of our products to our customers, whether via rate changes or different lines of products, and that's where we were focused on our situation. Our vision, what we were trying to develop is a paperless straight-through processing. through internal operations supported by modern, scalable, SOA integrated processing systems. We wanted to reduce the margin for error, so we reduced. There's rarely any data entry in our office. We've done a lot of integration with multiple systems via our core system, MajescoMastek, and we wanted to enable submission information to integration with back-end systems. How this is helping us is it's improving our expense ratios. It's helping with our losses. We're able to capture data, have our adjusters out there with a mobile technology to be able to submit estimates, photos immediately, real time into our adjusters so we could turn around and reduce the claim time payout. This is our high-level ARC flow for us. I'm going to walk you through this. And where we started, we wanted a true end-to-end system. And where we started here is, I'm going to show you here where the dot is here and here. These are all comparative raters. These are on the desktops of our independent agencies, and it acts as a data input system to be able to enter in the risk or the DNA of a particular insurer. When they click rate, it comes through our server, and we actually send back a rate to the independent agent where we are on a comparative rater. So we are able to control our rate. So our time and our change to market, once we get approved through the state on rate changes, we're not relying on outside comparative raters to control our destiny. So all our applications at point of sale, we issue the deck page, the application, an ID card. We issue any disclosures or exclusions, all come via our point of sale system. From there, it comes straight through into our policy administration system. The agents either submit via email or they fax in the proper documentation for our underwriters to review. And we use that through an integrated system between STG's policy administration system and ImageRight. I'm sure most of you are familiar with ImageRight. We're able to use ImageRight to do a lot of our processing and push it down to the lower economic scale in an effort to continue to grow our business. So we've actually segmented our business as it comes in. So, for example, we'll work a liability-only policy in a separate bucket within ImageRight, read through STG. We'll write liability policies with comp and collision. This helps our underwriters. When we separate this, helps our underwriters to be able to do a lot more quality and more efficient underwriting. Through that, we are connected through STG's billing system where we send out all our bills. We do direct bill policies here. So we will send monthly bills, we will do renewal bills, and any cancellation notices and so forth to run through here. We have integrated this with our banking systems, which we are now running through a lockbox. We're our own lockbox. So as payments come in, we're able to run payments through our banking machine, which read directly into the billing system, so it's posted automatically. And would prevent us from posting any payments against canceled accounts. We are also working on the integration of accepting recurring EFTs as well as credit cards. In addition to working with the agencies, we've also are integrating our system with Ivans or an Ivans type product like Connective, where we're downloading all our policy premiums on a daily basis in an effort so the agencies can download the system directly into the agency management system. This avoids them from data entering deck pages or endorsements that come down from most of the insurance companies. So that's been an excellent entry level for our customers today because it's preventing them from doing data entry as well. We also do a lot of electronic notifications to our lien holders for lost payees via e-liens. We've integrated this with the STG policy management system, and this reduces expense of posting, mailing, labor, and we have all the proof of certified mail via the e-liens system and the integration between PAS. In addition to that, we also do obviously our ISO stat reporting. All of that's integrated through their edit package as well through our policy administration system. Then we also, from here, we have designed it where we are now working most of our product that goes out when we have to mail to the insured. It has all OMR marks, which is connected to a Pitney Bowes machine. We have one person in our policy services department that actually does the imaging, the billing, and the Pitney Bowes machine. The OMR marks tells us the stack of papers that we're producing now for the insured. Tells, well, this set of papers is 4 pages, this set of papers is 3 pages, this is 2 pages. So it avoids us having to worry about either sorting or separating these documents. And these are the only mail that goes to the insured, because the rest of our mail for our agencies are now online. So they have a portal of which they have the ability to get their own mail and work their customers, either via report or the actual mail. The beauty about the integration with an Ivans-type product, they don't have to data enter that into their management system. This then goes, again, through the policy administration. It has the integration with ChoicePoint for us to have the ability to be able to pull MVRs. We're looking into current carrier and additional driver disclosures. Our claim system is also integrated with a few other companies, external, such as Corvell Medical Bills. This avoided, when we're a no-fault state and there's a lot of PIP here, this avoided a lot of the double entry of data when you receive a PIP bill. This is actually is OCR integrated in. The data is dropped into our claims administration system. When it's sent back and we get an explanation of benefits, the data is actually retrieved and populated in our system, so our adjusters can now verify and pay the claims the correct amount. That is also integrated with our checking and our files, as well as we do an ISO search to see if there's any history on any particular claims. All of this today is now working in our system, and we're pretty proud to say we're pretty integrated, and we're migrating forward with a few other products that are coming down the line, such as online endorsements, online reinstatements, and cancellations. We're actually in the testing phases of that today. And this is an overflow. Again, there's workflows built in to each of these other components as well. As you know, that ImageRight has a few workflows. The Corvell systems have a few workflows. The CCC claim system has workflows. Our outside adjusters have tough books. They're able to take pictures, do the recordings, email them directly into ImageRight, and our adjusters notified through task management immediately. Okay. And in conclusion, our whole goal here was to handle the bulk of transactions through straight-through processing. We wanted to be able to provide a quicker turnaround for our producers. The producers get paid faster. We actually can produce commission statements. We do them twice a month. And we have more applications, which this helps develop our relationship. We truly believe a lot of the items that Donald was talking about today was where the focus of our company has been, through relationships and through the ability to be able to service our customers. Our modern architecture allows us to expand into new products and markets quickly, whether it's other states or other areas of the region, especially with real-time rating. I can get a feel for what the market is, because anytime an agent does a quote in the comparative rater, I actually am able to see the data so we can determine where there's a market we can make money in or not. Once the market turns around, we feel pretty comfortable because we've built in a lot of these efficiencies with all our IT partners, with Majesco being the leader there. And we're positioned to be able to grow incrementally or be able to slow down our growth without affecting our staffing or our employees. And that's critical for us because, having happy employees creates happy customers, and happy customers obviously creates great revenue for companies. So we feel we were fortunate to start in this time to try to build a lot of this technology together and try to produce some of the things that, we heard Donald talk about this morning. And with that, I just want to say thank you for giving me this opportunity to talk to you. I'd like to move it over to our next speaker is going to be Billy McCarter from MajescoMastek.
Thanks, Victor. I'm going to take it for just a minute before I introduce Billy. We want to move to another polling question and get some feedback, if we can, from our audience members. The actual polling question this time is your firm considering any current or future FTP initiatives? If yes, in what time frame are you considering these? We'll take just a minute or two. This is a pretty straightforward question. You have four choices here in the next 12 months, 12 to 24 months, yes but no time frame, or no plans. And again, avoid that no vote button at the bottom so we can get as many of you responding as possible. Again, the question is your firm considering any current or future STP initiatives? If yes, in what time frame? All right, so looks like all the votes have come in. Aaron, why don't you close the polls? We'll take a look at the results. Okay, 31% of you are planning to undertake an FTP initiative within the next 12 months. 21% of you said 12 to 24 months is your time frame. Yes, 26% of you say, but with no time frame right now. And 21% of you said you have no plans at this point to conduct an STP initiative. Okay, well, thank you for that. We all appreciate your participation, and we want to keep things going here. Last but not least, I want to introduce William Billy McCarter. Where do I start here? Billy is responsible for the Property and Casualty Division of MajescoMastek, the U.S. subsidiary of Mastek Limited. MajescoMastek, as I'm sure most of you saw on Victor's slides, recently acquired Systems Task Group, which many of you saw as having the solutions on Victor's slide. That's STG, point of sale, underwriting, policy admin, billing, claims, and reinsurance. As a senior financial services, banking, and insurance technology executive with domestic and international business experience, Billy has a very long resume in both insurance and banking, from serving as EVP and COO for e-policy solutions at Insurity to Senior Vice President and CIO at Fireman's Fund. During his time at Fireman's Fund, Billy was responsible for implementing insurance solutions in all aspects of personal, commercial, and specialty line products, and also back-office solutions. Back in 2002, our competitor, Insurance and Technology, named Billy as one of its Elite 8 insurance CIOs. Billy has an academic background in business programming, human resource leadership, and ultimately earned his MBA in information systems. Billy, I'm going to hand the floor over to you.
Thanks, Pat. Good afternoon, everyone, and thank you for joining this webinar. I'd like to spend a few minutes on the current industry situation, just to add a few comments to what Don had outlined earlier, and really the need for upgrading or adding new policy administration capability for straight-through processing. I'll also spend a few minutes talking about our view of the IT solutions that are going to address the current situation, and focus a minute on the solution that we provided to Responsive, and also to a solution that we can provide to carriers that are dealing with the legacy problem. Responsive was lucky in that they started with a clean slate and could actually build out a straight-through processing capability and end-to-end capability without having to deal with a lot of the legacy challenges that some of the other carriers deal with in our market. So we'll talk a minute about that and then offer some conclusions. If you look at our industry today, we see that the soft market is continuing for many lines of business, and also the underperforming investment markets. And this is one of the few times that insurance companies have ever had to deal with both of those happening simultaneously. This has put a huge focus on expenses, and that really translates into productivity and efficiency to carriers. And along with that, a huge need, as Don pointed out, and I think Victor highlighted, which was on ease of doing business with producers in order to retain and grow the profitable business that they're getting from those producers. If you look at the IT solutions to this current crisis, we believe there are several areas that have to be addressed. I saw a quote the other day saying that the role of IT is to align technology with the customer now, not necessarily to align technology with the business. And I think there's some learning in that statement. Customers are more demanding now. Their expectations are higher than before with all of the ease of use technology that's in the market from the consumer side, and carriers have to be responsive to the customer's needs and be able to align their systems with the customers. So areas that carriers will focus on in order to address the growth problem that they have will obviously be in the area of operational efficiency. We all have to look at the back office and figure out better ways to streamline functions and to provide more straight-through processing for those types of risks that don't need to touch a human being. They'll also look for process improvements, and we've seen a huge focus in the customers and prospects we've talked to in the area of business process management and the ability to streamline those processes. The focus there has been primarily on how do I get products to market quicker, how do I add coverages to products, how do I change my rates, my rules quickly. Really more focus on the insurance content of configuration as opposed to the application itself. Carriers must implement new solutions that meet the new way agents and insurers want to operate. And if you reflect on the solution that Victor outlined a few moments ago, you see all of these aspects in terms of back office efficiency, process improvement, really focusing on their distribution channel and making it easy for their distribution channel. And then there are two other areas that clearly need to be addressed, and that's better risk management, risk selection. And the business obviously needs to embrace the straight-through processing and the ability for risk to be underwritten without a human touch. But we're seeing that the technology is there and available in the marketplace to make this happen. And obviously the compliance and regulatory systems will have to change as we see a lot of fallout from the recent crisis. So these are areas that must be addressed, and we think in the solution you saw with the responsive auto implementation, you see configurable point of sale, a core policy capability, claims administration, and the ability to quickly handle claims and pay claims, billing and cash management capability with the integration to the various services. One thing Victor didn't cover much but is included in the implementation is a dashboard for management reporting and pre-built interfaces to all of the different data services vendors. I'm sure you sensed in Victor's presentation some excitement about what they've been able to implement, and I think that capability is there with all carriers, even dealing with some of the legacy problems that we're dealing with in the marketplace today. For carriers with those legacy applications, we're recommending to our customers and our prospects that they focus on transitioning to these capabilities by leveraging those core assets that they have that are still providing a good utility. They can wrapper those assets with services, web services, in an SOA environment, and allow that to become part of a straight-through processing implementation. And then, of course, prioritizing that process or wrapping of those services so that you get some meaningful business increments. And no longer are we looking for 12-month, 24-month type project implementations. We have to deliver solutions in 90 to 180-day increments and show business results. So the ability to prioritize those things and wrapper those services and get them part of a straight-through processing is part of the whole solution. Straight-through processing is an example of successfully wrapping those old services and taking advantage of them. And as I mentioned earlier, BPM has become a tool that helps customers look at how do I improve those efficiencies and improve my workflows in order to meet some of these capabilities. And clearly SOA is the architecture which is going to help companies not only quickly make changes to their capabilities as their business changes, but also to future-proof their technology. Being able to componentize the environment and quickly add and change components is the benefit that SOA brings to the insurance market. If you look at the approach to STP in the legacy environment, we think technology is the key, and an incremental focus and set of priorities should be around new lines of business, new products, and new state expansion. And the solution must have a configuration capability to allow the carrier to quickly make changes, not the vendor. For example, in the marketplace today, you can find tools that configure an application. That's, to me, more like a development tool than it is a administrative tool for insurance professionals. And then there are tools that allow you to change the content of the insurance product, add forms, add rates, add rules. Our focus is to say, let's let insurance people work on insurance content, and let's let developers and professional IT people work on application development and configuration. And that way we get the best of both worlds. Second is enhanced customer service. With the tools and the capabilities that are in the marketplace today, we see the ability to take applications like billing, for example, and make it more of a customer service tool, and the ability to improve the service and turn around to not only the agents but to the insured. and distribution channel automation. Clearly, the message that came out in both previous presenters was ease of doing business. We need to begin to leverage the Internet not just for the browser capability, but think of things like what's under the heading of a Web 2.0, the ability to interact with your insureds and your agents better, to take advantage of some of the web technology that's going to make ease of doing business with them or make them very happy customers. What's available to you? Streamlined vendor processing solutions. BPM and SOA technology, key to dealing with these problems, and proven expertise and industry best practices. You need to make sure that as you're approaching STP, you have someone that has the breadth and the big picture of looking at STP and all of its different tentacles in this business. You know, insurance is really a collection of exceptions, and to try to find technologies that deal with every aspect of this is very difficult. And so you really need someone that has that proven experience and really understands how the best way to implement these solutions in an STP environment. And we would recommend selecting providers that can be a trusted advisor, that are in it for the long term, that focus on this business, and really can provide that long-term approach. So in conclusion, insurers need agile systems that are capable of handling rapid changes to the business environment. And if we've seen anything over the last few months, we know it's changing on a daily basis. They need the ability to process and service policies quickly, claims quickly, deal with billing issues quickly, all on a straight-through processing capability. Ability to develop new products faster, new coverages, new rates, new rules, new forms, etc. And the ability to address producer performance. One of the things I thought was interesting about Victor's implementation is his twice-a-month commission statements. I mean, he's able to get back to his producers quickly, and they like that. And then the ability to integrate heavily with third-party systems. These are just a few things that we believe are required in an agile system. And I'm sure you have your own view of things and priorities that are going to make you successful as a carrier. Hopefully we've given you some food for thought. We've showed you some capabilities and technologies that have been implemented to provide that. And we can certainly leverage some of the capabilities that you already have. So with that, I'll hand it now back over to Pat for the Q&A.
Okay. Thanks, Billy. I really appreciate the comments. Before we move into our Q&A, actually, we're going to be asking one more polling question. We're really putting our attendees to work today. We want, in light of the fact that the greater percentage of you answered yes to STP initiative development and the fact that you're moving forward in one way or the other, this is the follow-on question to that. What are the drivers for STP in your organization? You've got three choices here: increased customer and agent service, increased operational efficiency, and increased competition. So is increased competition affecting this? Is it operational efficiency you're looking for? Or is it to increase customer and agent service? All right, let's take a look at this. I want to move quickly now because we're kind of closing in on our Q&A session. All right, Aaron, if you could please close the polls and we'll show the results. Okay, 37% of you say increase customer agent service, and 62% of you are looking to increase operational efficiency. That's quite a statement. All right, so let's move on to our Q&A section. We have some questions in the queue already, but as I mentioned earlier, please feel free to type in your question in the box. We'll try to get to as many of them as we can. All three of our presenters are available to answer these questions today, and let's start here with our very first question. Let's see. In today's economic conditions, what can carriers do to reduce operating costs? Well, that plays right back to the polling question we just had. And actually, I think I could open this question up to any of the three of you. Maybe, Donald, you'd like to answer first, and then we'll let Victor explain how he went about reducing costs.
Sure. So automating tasks or automating the entire process, like a new business flow, means taking people out of that particular transaction or process flow. And so that means for a given volume of business coming through, you need less people, or the people can spend their time doing higher productivity kinds of tasks and carry out higher, more the kinds of job responsibilities they've really been trained to do. So all of those contribute to lowering operating costs.
Okay. Victor, did you want to add a comment to this in terms of what you did to reduce operating costs? In terms of your initiative, where I continue to see that very complex slide that you showed the attendees. Can you comment on this question? What are you doing to reduce operating costs? If you could, just concisely say it.
Sure. Hello?
Yes.
Okay. Oh. Hello?
Yep. We're with you.
Okay, great. One of the key components is having every manager or supervisor, everyone involved in your company, going back to the old school flow charting.
Mm-hmm.
If you could logically articulate, I'm not a programmer, I know system integration to some degree, but operational efficiency works when you blueprint or architect how things are running through your company.
Mm-hmm.
And if you can push those down to the lower economic scale so you could have quality and take your time in the staging of the workflow, that will help quite a bit on your expenses and operational efficiencies. And let other people involved. For example, our CFO or people in accounting, when we started this venture, I would ask them, just take Visio and you don't need to know all the templates, but take one box
mm-hmm.
and draw it to the next box and draw it to the next box. And then we'll provide that to someone who knows Visio a lot smarter than we do. But you have to put it down on paper to see where there's wasted time. So if you architect and lay things out as best as possible, you will find deficiencies and you will find ways to increase the efficiency.
Okay, so really a business process management approach, sounds like. Billy, I wanted to let you weigh in on this question. What can carriers do? What are you seeing your customers doing to reduce operating costs? Maybe you're on mute, Billy.
I think, Pat, they are, what we're seeing, our customers are doing exactly what Victor suggested. They're really inspecting what they're doing and getting rid of those processes or those tasks or functions that are adding low value. So I don't see anything different. It's just going back to business process management 101 and figuring out what you're doing and get rid of the unnecessary work.
Mm-hmm.
And by taking advantage of technology to do it. I mean, there's technologies in the market that are helping identify the efficiencies in the process. So, yeah.
Yep, okay, good. This next question speaks, I think, a little more to the end results than it does to the process itself, because it asks, the attendee is asking, what results can carriers expect after implementing STP in their organization? I'm not sure if we're talking process improvements here or ROI, but let's see. Maybe, Donald, do you want to take the first shot at this one?
Sure. We've seen in insurance companies we've talked to, especially on the personal line side, being able to do straight-through processing for over 60, 70, 80% of all submissions that are coming in. And that, in turn, has enabled them to reduce underwriting expenses by 2 or 3 points on, say, maybe a 22 points out of the combined ratio. So it's very, very significant in terms of impact.
Mm-hmm. Wow. Victor, I was going to pitch the same question to you. I guess you really did kind of walk us through what's happened to your organization since implementing STP, but do you want to comment on this?
Sure. I agree with Donald. What's happened for us is we're nimble enough right now that staffing isn't a big issue for us. We're able to do quality work with a lot less people. We can continue to grow our business. We're seeing more of the efficiencies, and the return on investment is trying to garnish and get any more points that can contribute to a better expense ratio and to a better loss ratio. So it's worked for us globally and without overworking our employees. And because they understand the workflow, they're seeing and they're thinking on how to do things better all the time. So I have the value of constant contribution through excellent employees.
Yeah, that's quite a statement. Billy, do you want to comment on this? I don't know if what your customers are telling you here.
Yeah, well, but I kind of come at it from both sides since I was a CIO in a large carrier and now selling to many different carriers. One of the key challenges is keeping underwriters productive, and if they're having to touch a lot of applications that are coming through that aren't subsequently underwritten, they're wasting a lot of time. So straight through processing is helping to keep the business that can be written that way away from a few and very talented underwriters, and to Victor's point, that's a staffing problem for most of the carriers. It was when I was in the carrier side, and I think it still is today, and we're seeing that in a lot of the customers we face.
Sure. Staffing issues are always big issues to face. All right, I think we have time for one last question here, and this one I think I'm going to pitch to Victor first because I know he walked us through the impetus for the STP initiative that he undertook, but the question says, what are the business considerations before embarking on STP? Now, I don't know if that's like what is the business case, but it certainly plays into that question. Victor, what was the number one thing that your company was looking at before you decided to go forward?
What was the number one thing we were looking at?
Right. So on the business side, was it taking a look at your P&L statement and realizing that something had to change? Was it looking at the process improvements that you knew you needed to make?
I think it was, everything you do in process improvement, you're looking at it from a P&L standpoint. Mm-hmm. But for us, it was global process improvement. Business considerations, if I understand the question, that we had to undertake was how to architect the paper flow in an insurance company.
Okay.
And the business considerations we had to take was what does our distribution have and where are they migrating to? We prefer to get a scanned image than a faxed image. So are they migrating into that? What is their internet speed? In addition to that, the business considerations we took was to minimize not working with vendors or in partners or anyone we deal with that is not going to be open to technology. Like, for example, if anyone wants to be paid an invoice in our company, they need to email it. If they mail it to me, I will delay that payment. Mm-hmm. And it sounds strong, but that's, I take the Henry Ford approach. So the business considerations was the same thing when we were working with our claims people. When we hire claims people, you need to understand that this is a technology-driven company. You need to be open. Don't be worried about paper. I'm trying to give you a whole list of them, if that's okay with you. And then just from a global perspective, are the clients that we do business with, our agencies are you looking to move forward in this market? Because I can help you by, we also give our clients, our agents, independent agencies, we try to educate them on technology, even if it improves their results or it improves their productivity with our competitors. That's fine with us because we believe we help them grow, we'll have our value between each other. So a lot of that came into play in trying to design this entire piece. And today we've been fortunate to have the right IT partners and vendors like Majesco and Pitney Bowes and ImageRight. There was times that they were talking together on our project without me needing to be involved.
Right. Yeah, this is some great feedback, by the way, real-world information. Donald, what about your research? Are you showing, does this validate what Victor's saying?
Sure. I think the insurance companies that are sensitive to what the demands that the producers are making and want to use technology to make it kind of a win-win proposition for their producers are the ones that are really going to thrive in the time that we're in right now.
Okay. I'm looking at the time here, and it's already 3 minutes past the hour, and we're really basically out of time, which I'm sorry to say because I think we've had a great series of questions here and answers. We've had a great discussion also amongst all three presenters, and I want to thank our speakers, Donald Light, Victor Arocho, and, of course, Billy McCarter for their insightful comments. As a note to our